AI stocks were absolutely soaring in 2024, and 2025 could bring more of the same as the companies that are spending money on artificial intelligence plan to continue and even accelerate that spending. But what are the best stocks to buy for 2025? More specifically, which one is the better stock to buy between Nvidia and Snowflake? Which one of these will be the better performing stock in 2025? That's the question I'll try and answer in this video while acknowledging, of course, that nobody knows what's going to happen in the future. I'll use revenue estimates. I'll use revenue growth rates, looking at the company's operating profitability, looking at the company's cash flow from operations, return on invested capital, and comparing the two on valuation, both looking at the price to free cash flow valuation and looking at the discounted cash flow valuation models I've created for Snowflake and NVIDIA to compare which one feels and seems more undervalued based on the estimates and assumptions in those valuation models. I'll bring it all together and answer the question which one I think is the better buy for 2025 in this video.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with revenue growths over the last 3 years, you'll notice NVIDIA overtook Snowflake in about, let's say, mid-2023 when its revenue started exploding as a result of increasing purchases for data centers optimized for artificial intelligence. And NVIDIA has maintained that lead for several consecutive quarters now. In fact, NVIDIA delivered revenue growth over 200% for 1, 2, 3 consecutive quarters. Revenue growth over 200% for a company that's generating tens of billions of revenue. That's truly unprecedented. Still, even in the latest quarter, even though NVIDIA's growth rate is slowing down, it was still over 93%. Meanwhile, Snowflake's revenue growth rate has been decelerating for several years now, dropping all the way down to 28% in the most recent quarter. Still, it's a really good growth rate. It's just not as high as the company had experienced in previous years. The next metric I wanted to compare these two on is cash flow from operations to sales. And in this metric, NVIDIA also demonstrating a big improvement, starting with the same time that it experienced the increase in revenue. Its cash flow from operations to sales are at 52%, and I expect NVIDIA will maintain this lead over Snowflake, which is actually declining now to 25%. Snowflake had done a great job, just like NVIDIA, with that accelerating rate of improvement. Look at that slope of improvement. That's really what had investors excited about Snowflake stock all the way up until mid-2023. And then as these improvements flatlined and now reversed, investors have become less enthusiastic about Snowflake stock. When comparing these two on the measurement of return on invested capital, we get a similar story. NVIDIA significantly outperforming Snowflake, and even though Snowflake had been improving, it's now going backward on this metric. Meanwhile, NVIDIA is improving meaningfully in this metric. So far, the 3 metrics that we looked at, which were revenue, cash flow from operations, and return on invested capital, NVIDIA had a clear advantage against Snowflake. So now let's get into the valuation metrics. And I chose to use the price to free cash flow because Snowflake has significantly positive free cash flow, while its earnings are still negative on the bottom line and still inconsistent on the bottom line. So to put them in more comparative terms, I chose to use the price to free cash flow. And according to this metric, Snowflake is more expensive than NVIDIA, trading at a price to free cash flow of 72 compared to NVIDIA at 60. Now, one of the reasons for this is because Snowflake is a software as a service business model, which has higher potential for profitability and cash flow longer term compared to a company like NVIDIA, which still relies on selling primarily hardware to companies. It's manufacturing those GPUs and networking equipment for data centers optimized for AI, even though NVIDIA is outsourcing most of that production, and NVIDIA is outsourcing that. So it's still an asset-light business model. It's more of a semiconductor design company rather than a semiconductor manufacturing company. and its profit margins and cash flows are much better than Snowflake, those are really rare events. You don't really see a company that does this type of business model beat out the software as a service beat business model in terms of cash flows and in terms of profitability. Another reason that explains this is Snowflake is still relatively new. It's still in the early stages of growth, while Nvidia is already generating 20, 30, $40 billion in quarterly revenue. So that's another explanation. If or when Snowflake reaches larger revenue, which the company totally expects to do, it has robust growth expectations between now and 2030. Their margins could improve to approach those of Nvidia. While it's unlikely that they will approach as high as Nvidia, because Nvidia, again, is an outlier of how successful it's been, Snowflake could be better than where it is. Now, when I did the discounted cash flow valuation model for Snowflake stock, I found that the company's intrinsic value per share was around $114. Now, I did this on October 28th, 2024, but the primary factors that are leading to this valuation estimate have not changed all that much. And so the current market price for Snowflake is over $172. So the discounted cash flow valuation model didn't present me with a calculation that demonstrated Snowflake stock is undervalued. Contrastly, when I did the NVIDIA discounted cash flow valuation model, and I did this one on November 11th, 2024, I found NVIDIA's intrinsic value per share to be over $314. That compares with its market price of $136 as of this recording, which did show me an undervaluation according to this valuation metric. So, when looking at the valuation metrics, both the price to free cash flow and the discounted cash flow valuation models, they favor Nvidia in terms of being more attractively priced. And then when we looked at the performance metrics, they also favored Nvidia compared to Snowflake. Now, of course, this isn't an apples to apples comparison, as I already highlighted, but I know many of you investors are looking at these two companies and trying to pick which one you should buy for 2025. And if I was in your shoes and if I was picking between these two stocks, like if I had to pick between these two stocks, remember, you don't have to pick between these two. You can add both of them to your portfolio. But if you're trying to pick between the two and trying to decide for only one of them, I would pick Nvidia as the better investment for 2025 and beyond. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.